Welcome back. My name is Luis Mendez, and I am your real estate guide, your tour. And I'm here in Central Florida, and I've been helping out everyone buy a home in Florida. Now, 2025 has been a special year, a great year for home buyers, not so much for sellers. Now, with it being 2025, we're ending the year and we're going into 2026. The market's still kind of the same. We are heavily in a buyer's market, meaning the buyers are getting what they want. And one thing I've noticed, a lot of buyers may not have a lot, especially first-time home buyers. They may not have a lot of money to put on a home because we've had quite a few, in the U.S. and around the world, been having a lot of strong financial hits with inflation, just with COVID, with job loss, with there's so many political things that's going around the world that's been hurting people financially. And with the buyer's market that we're at, sellers are desperate to sell and they're willing to bend over backwards to help the buyers. And this year, my buyers have been able to move into homes with practically nothing. I mean, they only had to pay for the inspection, put in $1,000 escrow and paying up, about $600 for the home inspection. That's all that they have been, having to pay versus paying $2,000 for for a rental. You had to pay first and last month plus that, plus a deposit, almost $5,000-6,000 just to move into a rental. That's just going to continue to increase, and you're throwing away $24,000 a year, where they could literally move in. You could move into a house with $2,000, and it's been a lot better for a lot of buyers, especially this year. And a lot of them have been using down payment assistance programs. Now, down payment assistance program is not for everyone. There's lots of pros to it, but there's some cons that people should be aware of. Some things that, I'm not sure if your lenders will go over with you, but you should be made aware. But if you're putting, kind of balancing things out, if you're tight with money, it's 100% worth it. If you have the funds, don't use it. And that's I would say. And you'll find out why. I have 7 reasons what you should know before using down payment assistance. And number 1 is it's not free money. And a lot of people, when they hear down payment assistance, most times they think is, oh, it's free money from the government or from some special program. Yes and no. There's 3 types of forms usually down payment assistance comes in. One, you have a forgivable loan, a deferred payment loan, or a repayable second mortgage. These are types of the down payment assistance that they come in. Now, most programs are structured as a second lien on the property, and that lien doesn't just go away because you forgot about it. Some are forgivable over time, but only if you meet special, very specific conditions. Some are, it's going to be forgiven within 30 years. Some after 5 years. Some every year, or after 10 years or after 5 years, it becomes fully forgiven. And, those are things you have to be aware of. Sometimes they have higher payments, sometimes they don't. But that's, to get to the point is, it's not free money, not all the time. Sometimes it is, but it comes with the catch, and we're going to get into what the catch is. But, and for example, if it's, it's forgivable in 5 years, meaning every year, they're forgiving 20% of the loan. 20% of that down payment assistance. So if you were to sell, in year 3, where you paid off, it's been 2 years and you're on the 3rd year, you may owe that 60% back on that. You may owe what's left. Or let's say you've been there for 4 years and you owe that extra 20% left on that down payment assistance program. And that's if you were to sell or refinance within that time frame. Not everything, and I'm just putting out numbers like 5 years or 10 years or percentage. Each program is a little bit different. Some are forgivable right when it's, right at closing. Some are not forgiven. Some are forgiven at the end of 30 years. So you have to think, if it's going to be a place that you're going to sell within 2 to 3 years, you may want to reconsider. If it's going to be a place that you're going to stay for a long time, this is your forever home, it might be a good deal to go into. So down payment assistance doesn't disappear. It kind of waits. But here's the thing. Number 2 is down payment assistance sometimes have higher interest rates. So it's money up front to help you buy the house, but you're kind of paying for it, within the next 30 years on the loan. So you have to look at that when you're purchasing a home. Down payment assistance are often paired with special loan packages, not standard conventional loans. The lender takes on more risk doing this for you because, we're not sure if they're not me. They're not sure you have all the funds for this. So they put in, the higher the risk, the higher the interest rates. Kind of like if you have bad credit score, there's loans out there. If you have a really bad credit score, they could work stuff out. The interest rate's going to be astronomical. If you have great credit score, that means you have a great history of paying stuff back. You're considered low risk. So that's usually when you get a lower interest rate. So those things are going to play out as well. But just to think about it, some down payment assistance might be up to 1% higher, or even 0.5% to 1% higher within 30 years. But you have to think about it, that could end up costing you in 30 years, tens of thousands of dollars more. To give an example of a good, what program works out, what program didn't work out. I had one client who he had one that wasn't forgivable, that he had to pay within the next 10 years. And after 10 years, he had an extra lump sum that he would have to pay off. And it was that compared to one that was forgivable. Well, the one that he had to pay off, it was cheaper monthly payment wise. It had a lower interest rate versus the one that was forgivable. The one that was forgivable had a higher interest rate, and plus the mortgage on that one was way higher than him paying off the monthly payments. So he decided to look at both options, and he's like, I like the one where I'm going to pay monthly to pay off my down payment assistance. It's giving me the money needed to purchase this home. And guess what? They were able to move in with $1,300. They got over, I think it was about $14,000 in down payment assistance. They were able to get closing costs covered from the sellers. They were able to get everything in the house fixed, and it kind of worked out very well for them, where all they had left to put down was $1,300, and it worked out very well for them. Their monthly payments is way cheaper than if they were to get a rental. So it worked out tremendous for them. So you have to look at those different things. There are higher interest rates, but you have to see what best fits you. So when you talk to the lender, and you give me a call, I have quite a few lenders to speak with. You would talk to them, present them your income, you share with them your personal information. They will shop the market for you, show you what's available, and give you options. And also, when you speak to them, you want to let them know what type of monthly payments you want to stay in. If let's say you are approved for $400,000, but you don't want that, $25 or $20 or $3,000 payment. You don't want that high, monthly payment. Well, then tell them where you're comfortable. If you're comfortable at a, 25, hey, max is 2,500. I want to stay under that. Then talk to that lender and say, hey, whatever I'm at, I don't want to exceed 2,500. I don't want to exceed, $2,000 a month. And then say what, based off of down payment, based off of the interest rates, the taxes, and the insurance, what is the purchase price going to look like? And then from there, we could look at homes. Now, if we look at homes and you don't like what's around, you do have that buffer. And he says, hey, you've seen the houses at $300,000. He doesn't like it, but how about we go to 325 or 340? Let's kind of take a look at those options. It's going to be this amount, right? And you kind of go from there. But back to the down payment assistance. Number 3, sellers may not accept your down payment assistance. Mostly, and this is going to be a big thing, is in a seller's market, you're less likely to get your offer accepted. During COVID, I remember during COVID, if you didn't have cash, you were not getting a house. And if the house was on a market for a long time, the only way to get it without cash would be conventional. If you were a VA or FHA, I knew realtors who would just hang up the phone on you. They wouldn't waste time with you. And that sounds crazy, but you were to put an offer, even if you go above asking price, they know the seller's not going to accept it. I remember we were using a company, a cash buying company, where the company will buy the house for you cash and then charge you a 2%, 2 to 3% fee. And then you'll buy it from them with that 2 to 3% fee. So that way you could buy the house with FHA or something or with one of those properties like that. But that was the only way for you to get one of these houses during that time, because it was such a higher market. So if you were to go in with a down payment assistance or FHA, it was not going through. I remember I did so many cash deals during COVID, I almost forgot how to do a loan. I was like, whoa, what do you mean it's going to take 30 days to close? Like, you need an appraisal. Like, we had so many of the regular cash deals, we almost forgot how to do the basic type of loan. Now in a buyer's market, it depends on the down payment assistance programs. There's a down payment assistance program called HANDS. I hate this program. And the reason I hate this program is because I think it's totally unfair. I've heard that it changed starting December 1st, 2025. I heard it changed, but it's supposed to be a program to help buyers, folks who are in need of purchasing a home. But the house has to be in perfect condition, meaning everything on the inspection list has to be fixed. Everything. Unless that was just, the issues that Polk County gave to our clients, they wanted every specific thing on there to be fixed. They delayed it. Takes 90 days to close. And thank God, the house was on the market for 180 days, and they kind of had no choice but to get us because no one else was buying that house. But the buyer, because there was like $20,000 worth of things that the house needed to get fixed. And, mind you, they were buying at a down payment assistance program, using this program. So the house was under $200,000. Finding a house in perfect condition under $200,000 does not exist. Not in this time that we're living. It just doesn't exist. And if it did exist, it wouldn't be on the market for 100 days. It would be gone within a week, and it wouldn't be for under $200,000. It would have sold a long time ago. So, that's just something to consider. Now, if you're coming to a buyer with this down payment assistance program, you're going to have to go, to this seller, and you're going to have to explain to them it's a HANDS. It's going to take about 60 to 90 days to close. They need to fix everything. Versus them getting a conventional loan for about $10,000 less, but close in 30 days. What do you think they're going to do? Even though with yours, they're going to get $15,000, $10,000 to $15,000 more. They're probably, if the realtor knows what they're doing, they're probably going to go with the conventional loan, because that FHA, HANDS down payment assistance program may not close. It may not go through, or they may require more things from the seller, and the seller is just going to be tied up. Like, I don't have the funds to fix everything on this house. So you do you. I'm sorry. Let's put it back on the market. And then guess what? You probably lost that buyer. And in a buyer's market, sellers do not want to lose good buyers. It's better to take a small loss than to take the risk with a down payment assistance program that has big big issues like that have all these specialties, makes things super complicated. And that's the problem with some down payment assistance programs. They become very, very complicated, and it becomes a high risk for the sellers. So those are some things you need to consider. Some down payment assistance programs are income limited, price limited, and location limited. So you have to figure out in areas, kind of like with the Hands program. Hands is not going to help out someone who's making good money. Even though you're a first time home buyer, it's a great program for people because it offers, up to $30,000. This my client, they ended up getting almost $40,000 with closing costs plus down payment assistance and everything, and they got everything fixed. So I'm telling you, that was a miracle how we got everything closed. It's possible. I'm not afraid to work it. I just want to make sure everyone's fully aware of what the program is. But that's something that you need to consider. I think the best way to go about it is to purchase new construction that's in a non-HOA area, that's from a private build, because usually those are already under warranty, and if there's any issues with the house, they have almost kind of have no choice but to fix it because it's under warranty. So it kind of works out better for you. And going from a price difference from like 250 to under 200 to under 300, we could work something out for sure. So if you were to get something like that, it works tremendously for a new construction, especially if that new construction is a private builder versus a like the Lennar, DR Horton, or some big corporate company like that. And in Polk County, Highlands County, there's quite a few different counties that have their own programs like this. And there's a lot of private builders where they build multiple houses, but they're not a big company. They build like maybe 10 to 30 houses per year. It's in a small area. Number 6 is refinancing later. Kind of what I talked about in the beginning, where if it's many buyers plan to refinance later if the rates drop. I always tell people, if the rates drop about 1.5%, I think it's a pretty good deal to refinance. If your income increases, definitely do it. Or if your equity grows, do it. Now, down payment assistance can make some of those things difficult, especially if you have to pay the money back. You have to take those things into consideration. If you're super tight and you need money and you're in a non-forgivable loan, refinancing is gonna be very, very, very hard because the loan's not forgiven. So if you're trying to refinance and there's not much equity, your income hasn't gone up, or the interest rates hasn't dropped, you're kind of stuck. And that's just something to just consider. Not trying to scare you off on it, but the more you know, the better you are to make better choices, better things that fit you. Because I'd hate for you to buy something and be like, oh, I had no idea. Well, now it's not bad, but if it's something that it could help you with, hopefully. Monthly payments. Number 6 is monthly payments reality, what buyers feel. So buyers, you focus on getting in and not staying in. Down payment assistance gets you in the house. But you have to think these higher interest rates, you got mortgage insurance, assistance loans, you're going to get higher payments versus saving up money, building your credit, and getting a conventional loan. If you could do it at 20% down, your monthly payments are going to be a lot cheaper. But if not, I I would always prefer conventional loan if possible. Your offers are a lot stronger, makes it easier to close, especially during the inspections and the appraisals and all that stuff. Things are a lot easier, but you have to understand the reality of your monthly payments will be a little bit higher with down payment assistance, but you're getting into the house right now. It gives you that push, gives you that boost, and that boost, you're spreading out the payments. So you have to, kind of balance out. And if that monthly payment works out for you, then it's tremendous. But if you could save up the money, let's say you and your spouse been, you could take out 401k, or you've been saving up for a while, selling tamales on the side of the street for, the past 5 years, you got 5, 10, 20% to put down. Your payments are going to be way less for that. And plus it's going to have a lower interest rate. So you have to consider what's going to work out for you. You make a high cost. And for us, when I bought my house, my wife and I, we poured out all the money, all of our money into the house, and we still had to fix the house. We put in, quite a few things into our home. And then, part of owning a home, especially if you got a historic homes, things break. And we found out our sewage is 80 feet long. All the way at the end was collapsed. And during the inspection, they didn't notice because I was here during the inspection. They let the water run. Everything was going great. I mean, he left it running for a good 10 minutes. Nothing was coming back up. It was running fine. And I guess he shut off the water right before maybe he was coming back or whatnot. But at the time of inspection, everything was great. 2 months later, living in the house, we started seeing some water come up, and come to find out it was a collapsed plumbing. And when you went out and reached out to a plumber, they said it was $6,000 to fix. That hit us so hard because we poured out all of our money for our house, and we added, we had to fix the electrical, we had to put in a new AC system. I mean, we got a great deal. My mortgage is $700, and I still brag about how cheap my mortgage is. But we had to make these changes, and thank God we were able to know some people who were able to help us, but we didn't have the money right there. Where when you use down payment assistance, guess what? You still have more of your money in case of emergencies where you have to, fix stuff. So you have to kind of balance those things out on your own and see what works out for you. And the last is when down payment assistance is a great option. If you plan to stay at a property for a long term, or which I suggest, if you're a young couple, don't sell your property. Take out money from your property to buy your second home, and then continue. Never sell your property. And in fact, when your kids get older, give them the house. Give them a house, boost them out. Boost them in their stage, so that way they could grow, they could save up money, and they could kind of build wealth on their own. That's what I recommend. And cash is going to be the biggest obstacle for some people. If you don't have the cash in front of you, but you're kind of tight, you're stuck between, putting $4,000 to $6,000 into a rental that's not yours, or, moving into a place for $1,500. It might just work out best for you. You might be paying a little bit more on stuff. You may be tight, but guess what? Your monthly payments is going to be pretty fair, consistent. My monthly payments have been roughly the same for the past 6 years. It may have gone up and down a little bit based off of the the insurance costs and the tax has been going up and down, but it's been very, very close to, what I bought the house for, compared to when I used to rent in Orlando. When I first rented in Orlando back in 2012, or 2015, our rent was $700. And in 4 years, was it? Yeah, 4 years later, it went from $700 to $1,200, and we're talking about a studio near Universal, and it jumped up so high. And I remember they're like, "Well, if you don't like it, move," you know, and it's crazy. Where now we have a bigger house, we're paying what we paid back in 2015, and it's been pretty much consistent. It's never gotten near 850. It's been always under 850. There was only one time I got up to like 820, and that's because I forgot to file for homestead. But it's been pretty, I always tell people to file for homestead, and I just forgot to file for homestead that specific year. But after we filed for homestead, interest the bills went back down, and it worked out great. But so if you need the money to move in, it works out for you. If you're not going to be in a property for a long time, don't do it. If you have the funds, don't do it. It's going to be a trade-off. I think if, for the families, if you're starting off, if you're new, if you're going to be in here for a long time, if your main goal is to build some roots, I think this is a great opportunity for you. I think this is a great thing that people, can get into. And if you have any questions or want more information on it, give me a call, 407-790-6232. I'd love to guide you through this whole process and to show you the way, help you out. And then like I said, I have some great lenders who could, walk you each step of the way. We're buying a home. It's not stressful. I take on all that stress and I love it. It's not, to me, I don't find it stressful. It's a great puzzle. And we come and we find you the house that works for you. And then you end up inviting me over because you love it so much. You tell all your friends and be like, hey, look, this is a guy who helped our family get a house. And I can't wait to do that for you. So make sure you give me a call, but like, subscribe, follow. And I hope you stayed all the way to the end and watch this. But comment below if you have any questions. Love to help you.